Hi, my name is Carl Tart, and I am the graduate assistant for the Student Financial Management Center here in the Olinde Career Center at LSU. I'm so excited to be able to present to you today just some general information about credit. So please make sure that you do watch the next two videos in our credit series as it provides ample information that supports the information in this slideshow. So let's get started. For the next 2 to 3 minutes, I want you to pause this video and I want you to discuss either by yourself or with any partners that you have or on your virtual call what is your personal definition of credit. What do you think credit means? So go ahead and pause the video for 2 to 3 minutes and let's get started. All right. So I'm glad you had the discussion and I'm glad you all had some ideas. So let's dive straight in. What exactly is credit? How would you define credit? Credit is such a broad term and it has so many different meanings in the financial world. So we try our best to make sure that we give you a concise but beneficial definition of credit. So, credit refers to a contractual agreement to purchase a good or service with the express promise to pay for it later. So, credit also works as a measure of trust between two parties at entering a financial agreement. So, this can be, you really can get credit from anywhere. But we're going to talk about official ways to start credit and why credit is important. So right now, there are three main types of credit. You have bank credit, which is one of the most popular forms of credit. Comes from your bank account or loans that you might take out. Financial credit, which will be coming from our financial institutions, which we will discuss a little later. And deferred payments, and which specifically deferred payments on goods. So that means that a merchant was able to give you a good as long as you promise to pay for it later. So credit is so important because it provides better job opportunities. You get more apartment and house choices because they do run credit checks. You get lower interest rate on borrowing because your credit shows that you're a trustworthy borrower and that you're able to pay back your loans or any money or goods that you borrow. You get access to premier banking services and you get very fast loan decisions because people know that you are trustworthy and that you do pay back the money that you borrow. So, the credit landscape can be very complex and complete and confusing, and can be difficult to know even where to start. The first step to achieving strong credit health starts with investing in understanding the ins and the outs of your credit score, and learning about your credit score and the actions you can take to help improve it will help you become better positioned to unlock your full credit potential and achieve your financial goals. Your FICO credit score is determined by the following criteria. So your payment history is very, very important. Your payment history includes the number of accounts paid on time, the number of accounts that you have past due, and how long it's been due, and the accounts and collections, charge-offs, or any bankruptcies. So it's good to make sure that you have a positive payment history, paying everything on time, paying more than the minimum, and we're going to talk about that a little bit later. All right. Amounts owed includes the amount owed in the number of accounts that you have, or the number of accounts with balances, and any outstanding balances that you have in proportion to your total credit lines. So what that means is your score. A good portion of your score looks at the amount of money that you owe compared to the number of credit lines that you have open. As well as your length of credit history is very important. So your length of credit history is just the length of how long you've had your credit accounts open. New credit, it refers to the number of accounts recently opened, including a number of new credit inquiries. So credit inquiries are also very important whenever a business or a loan or any application says that they're going to do a credit check. That does affect your credit score. So that's very important to understand. And also the types of credit that you use. So it refers to mixed credit because it can reflect in your report, and it can be things like car loans, mortgages, credit cards, etc. So that goes back to credit can be there are main types of credit, but credit can really be anything. If you're borrowing and you need to pay that money back. So this is just a quick breakdown of credit scores. So a credit score is a numerical calculation that is based on your financial behavior as reported on your credit report. Virtually all lenders look at your credit score to determine if you responsibly manage your credit obligations. So I listed the credit scores in descending order so you know like the range. Um, a typical college student, if they make great financial decisions and credit decisions early on, they typically come out of college within a good and excellent realm of credit scores. And so it is also important to remain in those areas as the benefits mentioned before. You get easier access to loans, you get faster loan decisions, you get just more access in general. And so, credit reporting, there are three major credit bureaus. You have Equifax, you have Experian, and you have TransUnion. All three bureaus maintain credit scores on borrowers. However, there may be some variation in the calculation of the credit score, as well as information shown on a report, because not all creditors report to each bureau. So, your credit score might say one thing through Equifax. It might say have one number through Experian, and it might have a different number through TransUnion. But it doesn't mean that you have three different credit scores. All it means is that one company has everything reported, while some company has while some bureaus have only partial credit history on you. And so you are actually able to obtain a free credit report every single year at no cost from the three reporting agencies. Um, and so just to remind you that there is a variation in your credit score, just a small variation. And so it is important to compare the credit reports from all three bureaus. Periodically looking over your credit report will also ensure that your credit usage is being reported accurately. All right. If you have any questions, I guarantee you that we can get you answers to them. And so here is my contact information. We are located on the first floor of the Union near the ATMs. Please come in during one of our drop-in hours or schedule an appointment with the SFMC. You can do that through your handshake or by going to lsu.edu/SFMC. Also, my email is listed at the bottom, careersynergy86 at lsu.edu. Please forward any questions that you may have to me, and I will get to you as soon as possible. Thank you so much, and as always, go Tigers.